Hello and welcome to the day ahead. It is Tuesday, June the 21st. I'm Andrew Gagan. Well, to the action overnight, and global investor sentiment has improved. Wall Street was closed for Juneteenth celebrations. President Joe Biden made the date a federal day off just last year, recognising the independence of black Americans. S&P 500 futures, though, are up 1.1%. European markets chalked up modest gains overnight following the sharpest weekly decline since the start of the pandemic, as central bank rate hikes weigh heavy on investors. The German DAX index rose more than 1% and UK's FTSE was up 1.5%, with shares of Rio fell by 1% and BHP shares falling more than 1.5% in London trade. Chinese blue chips rose on the news the US president is considering removing some tariffs on China in a bid to bring down inflation. US Treasury Secretary Janet Yellen said some tariffs on China inherited from the administration of former President Donald Trump serve no strategic purpose now. Well, with a holiday in the States, the focus is on Europe and the latest economic data. Germany's producer price index for May surging more than 33.5% year on year. Energy price inflation is rising at an annual pace of 87%. Excluding energy, PPI inflation up 16.5% on the year. And European Central Bank President Christine Lagarde saying wage growth has increased, while reiterating that the bank's new crisis tool will be used to reach the central bank's inflation goal. And the Bank of England's Catherine Mann has said that the central bank should raise rates faster than it has so far because of the sterling's weakness. It's adding to Britain's inflation pressures. The British pound has fallen 6% against the US dollar over the past 2 months. Meanwhile, speaking in Spain, St. Louis Fed President James Bullard said the US Federal Reserve could raise interest rates swiftly this year, and he hopes it can pull off a repeat of the success of the central bank's 1994 tightening cycle, which he says set the US economy up there for a stellar performance in the second half of the 1990s. That tightening cycle took 7 moves for the Fed to double interest rates to 6%. Well, major currencies were weaker against the US dollar, the Aussie dollar falling to 69.5 US cents. To the local share market, it's set to take its cues from Europe given the holiday on Wall Street and open higher, ending a week of losses. ASX futures currently up around 0.7%. And the price of oil traded higher overnight, with supplies remaining tight despite slowing economic growth. Brent crude up around 1%. And data from the International Energy Forum showed global oil demand fell in April to below pre-pandemic levels as consumption weakened across Asia. And the price of iron ore continues to fall, with gains made this year now erased as steel mills in China cut production. Dalian iron ore futures slumping by their 11% limit as fears grow about a collapse of steel consumption in China, brought on by COVID restrictions, a slowdown in construction activity during the rainy season, and weak profits at mills. Base metal prices were mostly higher, with copper rising after falling to 9-month lows on concerns about a global recession. And the gold futures price rose marginally, and Bitcoin is just managing to hold on above 20,000 US dollars. Looking at the day ahead, all eyes are on this month's RBA meeting minutes coming out at 11:30 Eastern this morning, and it will also release a review of its yield curve target policy. And RBA Governor Philip Lowe will deliver a speech this morning titled Inflation and Monetary Policy. And that is your day ahead. We'll see you again tomorrow.